The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. And yeah, we're going to have quite a start to the trading week. Now, we get non-farm payrolls on Friday. You get Amazon, Google earnings, AMD, PayPal, many other equities coming out with their numbers. Palantir after the bell today. We'll jump over to some of those. But we kick it off with tariffs. Quite the acceleration. The biggest move in markets, besides equities trading lower, NASDAQ 100, you're off by 1.7% right now. Basically right where we opened at 6 o'clock. Right, pretty interesting. Almost to the tick. You open at 21,200 last night, 6 p.m., down almost 400 points, and we're sitting right at that price level right now, 21,205. S&P's off by a similar 1.7% right now. You're trading at 59.68. Again, pretty much right where we kicked off the 6 p.m. open of the futures last night. Dow approaching session lows, off 640 points, we'll call it, 1.4% in the red, 44,062. And how about the Russell, off by 2.2% or 51 points in the red. Bitcoin's a growth stock. It's trading like it this morning, down 7%, $7,200 at 94,840. Crude, we got tariffs on energy imports. That's going to raise the price. Crude, $74.60 right now, up $2.07. You jump over to gold. Man, we got so much action in this market. Okay, gold's up $17 at $28.52. And man, if you are trading gold in any other currency, you're talking about all-time highs across the board, because we jumped to, well, let's jump to yields first. Pretty muted reaction, right? We have movement across every other market right now, whether you're talking about equities, you're talking about currencies. Yields are right where we were Wednesday, Thursday, and Friday. We get the 10-year about 4.5%. Let's see where we're ticking around right now. 4.51 is where we sit. 4.51, kind of in the realm of where we've been, right? You put it back to a daily, you see the move we have right where we were the last 5 days in terms of 109.04. Not the case with the dollar, though. Check out the move we have going on the dollar. We've given back some of the gains. We almost hit 110 in the overnight session. We're trading right now at 109.30. We had a 107 handle on Friday. You see the pop on the first news when Trump came out and talked about the tariffs that were coming over the weekend. The dollar pops to 108.40. We get the news. We drive to 110. We're at 109.30. You take a look at the dollar on a longer term basis. And yeah, that is quite a bounce from a critical area. That critical area, you see kind of the highs of late 2023. The highs at 107.35. We got down to 106.96. So almost 107 is where we bounced from. You got down to 107.21 in the week prior. And just like that, we're pushing 110 again in the dollar. Now, NVIDIA, you talk about some moves, man. NVIDIA's got a couple of problems on a couple of fronts. AI, and then you got tariffs in the mix, of course, hurting every equity, bringing down the market, risk off, okay? You know what's remarkable is, I was looking at it this morning, just where we were January 24th, okay? I'm not cherry picking the high of 153. I'm taking the high there, which is 149.10, okay? That was the open on Friday morning, 1 week removed, okay? So we haven't even started trading today, and that was the open 6 trading days ago. That's all we're talking about, 6 trading days. Friday, and then each day last week. Okay, now it was quite a week because DeepSeek happened on Monday, all right? And we finished the week basically where we started the week in terms of Monday's action. But just from 149.10 to 111.51 that we hit this morning, $920 billion in market capitalization lost by NVIDIA shareholders over a period of 10 days. Almost $1 trillion, okay? And if you bump it up to 153.74, it is over $1 trillion, which is remarkable. All right, you want to see the exact number? NVIDIA has 24,400 I think is the number. Let's see. Yeah, 24,490,000,000 shares. Okay. So to put that in context, they lost $1 billion, $1 trillion. Yeah, you got to recalibrate your brain, right? You should expect volatility when you trade from 45 up to 153, but a back off to 110, okay? I mean, you're talking about, I know we all expect pullbacks, but 153, it hit 110 this morning. We're at 115 right now. Let's just do where we are, 115. I'm not even cherry picking the 110. That's a $38 drop. That's a 25% decline from the open, not even where we are, just like that. And 25% on this equity is $1 trillion. Pretty remarkable, almost, okay? But from highs to lows that we made this morning, over $1 trillion lost. It's indicative of the volatility that is coming down the line, folks. That's the point. Now, we got action all over the place. I mentioned Palantir. They're coming out with their earnings after the bell. Volatility with the rest of the market, but boy, they've been on quite a tear, right? You back it up on a 3-year weekly even. A couple years ago, $5. You're pushing 82. We're pushing all-time highs last week. We're trading right now at about $80 in the pre-market, $80.38. Car companies getting a lot of focus. We'll jump over to these stories in a minute, but you're talking about $3,000, the average price of the vehicle. You know, one analyst on Bloomberg this morning saying, I don't know how they stay. If they stay, car companies, they just can't do business at that type of a levy. 25% from Mexico, 25% from Canada, negotiations on the table. How many of those do they potentially bring back to the U.S.? But nonetheless, right? You got Ford down, what, 46 pennies? Yeah, you're talking about 4.5%. GM down almost $4. Quite a move. Many companies dealing with some woes. Now, you jump over to Walmart, okay? You talk about a move from 98 to 94. Target from 138 to 134. One interesting fact of this, yeah, look at Amazon clawing it back. The part about the small parcels from China, whether it's Shein or Temu, those are not going to be exempt from tariffs anymore. Now, Amazon was going to try and replicate that business because they had to compete. But I almost feel like, not almost, that is a win for Amazon, not competing with drop shippers from China, competing on price. So it'll be interesting to see how Amazon trades today, because that's an element of things that is in there, and we'll see how they open. Quite a week for Amazon last week to 241. You closed at 237. Today we're trading at 234. But for some context, 234, and that was an all-time high outside of anything in the last couple weeks for Amazon. You jump over to Microsoft shares this morning, down about $5. I believe Microsoft, we'll pull it up. I think it's Thursday that you're getting Amazon and Google. I'll look at the numbers. We'll get them this week after this break. But Amazon, they're out with theirs, and we got Google out with theirs as well, up to 207 last week. Remarkable acceleration. You back off a bit. We're still above 200. Same thing for Google. You're talking about record territory outside the last couple weeks. But, man, we're going to keep our eye on the dollar as you're pushing 109.24 this morning. All right, folks, we'll come back. We'll talk about it. We'll talk some yields, too. Now, we got non-farm payrolls on Friday. We have the Fed. Okay, and we're going to talk about the Fed because guess what? They're going to talk about how they're going to raise all the money they need. And you got a new Treasury Secretary, and he's going to deal with duration. How far is he going to go out? We'll take a look at some of those numbers when we get back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We get the dollar 109.18 with yields in focus, of course. We get jobs, non-farm payrolls for the month of January on Friday. Pretty remarkable that they had the 10-year, as I mentioned. Not a lot of volatility compared with everything else in terms of, you're right back to where we were on Friday. Not that bad of a move. 109.03, right where we were Friday afternoon before Trump talked about, there was your 1 o'clock move right here. So pretty much yields in focus in terms of right back where we were. But this one's an interesting one. So we got a new Treasury Secretary, of course. He's been confirmed. And where's he going to go with debt? Now, he had a lot to say about the last Treasury Secretary, Yellen, blasting her over the department's strategy for issuing federal debt. It's now up to him. And you're going to get the refunding plan. I believe it's Wednesday. I was reading this earlier. He charged Yellen with having artificially held down sales of longer maturity treasuries, to boost the pre-election economy. He wanted more longer-term securities instead of the short-term. One challenge is that longer-term yields have jumped. The bet I have to chuckle, right? Because even since September. A percentage point since September, in part due to the fact that they knew that Trump was coming into office, because you're talking about larger fiscal deficits through cuts that aren't paid for, inflation through tariffs that are taxes that we're getting right now. With higher levies set to kick in across the board, Canada, Mexico, China, starting Tuesday, the refunding this week takes place at a particular time of uncertainty, The 10-year is 20 basis points above bills, which mature in up to a year. The Treasury, since 2023 of August, has kept its quarterly refunding auctions, which span 3, 10, and 30-year maturities at $125 billion. Where are they going to go for that? The amount of debt that they have to sell, over time continues to climb. And what happens, right? If they have to push a supply to the market, modern economics mean that if you're pushing supply higher, where supply and demand equal on the curve, means that, what does it mean? It means price goes down, which means yield goes up. If you got to sell a ton of product, which is what we have to do, we have to sell a ton of our debt. If you have to sell a ton of our product, they're going to have to go out longer term, right? They're not going to be able to service this debt on a super short-term basis, I believe is his point. It's probably a legitimate point. You can't do it at that level, okay? But keeping the status quo for issuance size would put next week's refunding auction for this is the number that they have. So look for any shifts in here. You're talking about $58 billion of 3-year notes, $42 billion of 10-year notes, and $25 billion of 30-year notes. All right, and you're going to get it on Wednesdays when you get it in terms of that funding schedule. It's an important one. And there are the possibilities of big surprises here. And this is where, you really want to keep your eye on what's mattering right now. You got a new Treasury Secretary. He was very critical of Yellen. Okay. And when is that going to happen? Okay. You have JP Morgan, Citi, Santander, Societe Generale. They expect Basil to leave the guidance intact for now. And that guidance is that they're staying short term, basically. Okay? Just going to try and get the exact guidance, which is in here. I know I'm scrolling. Here we go. In the past 4 straight so-called quarterly refunding plans, the Treasury has advised that it did not expect to increase issuance of longer-dated securities for at least the next several quarters. So that's going to be the point on Wednesday, okay? Do they expect to increase issuance of longer-dated securities? Now, the market does not expect him to turn on a dime and freak out the market. It'll be a gradual process, but when is that gradual process going to take place? Is it going to take place not in the funding that's happening that I just told you about, which are these numbers right here on February 11th, 12th, and 13th, okay? But going out 1 quarter further, or do they stretch it to December, right? So keep your eye, because it's going to be an interesting one, and the shift is going to take place. And the reason why I say that, right, is imagine if they shift quicker to longer dated maturities, what's going to happen? Let's go out to the 30-year. If they shift to the 30-year and they flood supply, not flood, but to exaggerate the scenario for better demonstration of what's going to happen, right, what's going to happen? What's remarkable here is if they push out supply over and over and over and over, people are going to be paying less, right? They're going to inundate the market with supply. In order to sell that, they're going to have to go lower and lower. And as a result, that's going to drive yields higher. And what's remarkable is, okay, that seems excessive if you look at this 30-year chart since 2008, because we're already at a dramatically lower price, right? Yields are very high compared to what they were. We have recency bias, folks. Remember that rates were a lot higher for an extended period of time when the economy was doing very well, and there's nothing to say they can't go back there, and we need to stretch out the duration. So higher for longer. Looks like it's in the cards right now, but that's an interesting one. As you get that funding schedule coming out Wednesday for the February one, look for how that new Treasury Secretary is going to proceed for longer dated maturities as you go forward. All right, jumping around to some other headlines. So we talked about that. It's going to be all tariffs as we open, man. You got the Journal out here talking about NVIDIA as well. And then you got the editorial board of the Journal, the dumbest trade war fallout begins. Canada, Mexico, vow retaliation. You know, I put out in the newsletter this morning, folks, something to consider, all right? They say in wars, everyone loses, right? No one wins. It is a trade war. And listen, I see it all the time. My dad had a lot going on in real estate. He was bringing in some things in China. He was paying those things. He's paying those taxes, okay? Business owners. Yeah, you don't want that to happen. That's great. But China ain't paying nothing, man. It's people that are bringing it into the U.S. that are paying it. They're paying it at the port. So let's have the real conversation of, most of the time it's going to be businesses, Americans, even small businesses. And those costs are going to get transferred. You're going to see it happen with cars, man. Yeah, they're talking about cars in the den right now. You want to get a car, you either go get one like this morning or you wait until things cool off would be my goal. Make your decisions quickly because things could exacerbate. And yeah, you better believe it, man. Those auto parts go back and forth across that border over and over and over. Many of these details not quite figured out yet, but the market has to figure it out in 3 minutes when we open. It's going to try and figure it out. S&P's off 100, NASDAQ 100 off 400, Dow off 650. We'll be right back, folks.
This year has already been a wild ride for the market. We started off heavily in the red, and now it seems like we may be traversing back to all-time highs. In short, this market has been a whiplash and requires constant pivoting. Where does the market go next? Should I add to this position or cut my losses? Where is the next opportunity? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 4 hours of live trading. Larry has been through many markets just like this one, and his insights are invaluable. The next event is this Friday, January 24th from 9 a.m. to 12 p.m. Eastern. If you subscribe today, you'll also be able to attend his session February 8th. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in a fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. You got the NASDAQ 100 down 400 points right now, down off 1.9%, 21,185. You get the S&Ps off 101 off the open. And yeah, I imagine today's going to be an interesting one. We'll see how we break down in terms of the markets digesting, quite a digestion of market action over the weekend. Jump back to the dollar, holding at about 109.23. The 10-year Yeah, sitting just at about 4.5%. So as I mentioned, we got Palantir out with their numbers after the bell tonight. You jump over to the Analyze tab. And so you're looking at about a $9 move. Man, this thing's just so volatile. $80 equity, $9 move in either direction. You jump over to, $10 move if you want action through Friday, but $9 of that, it's moving pretty quickly as we open right now. Options still repricing. If you ever trade in options, folks, okay? The market finally got straight here. You can see everything, but it does take a moment for the option market to price itself on the open sometimes. Give it a second, especially if you're dealing with wide bid asks but nonetheless, you got Palantir. Yeah, so you're looking at, what are we talking about? $10.20 for action through tonight and about $11.30 for action through the week and on only an $80 equity. Now I mentioned, so you got Google with their numbers Tuesday after the bell. Tuesday as well. You're talking about Merck, Pfizer, Pepsi, AMD, among others. Google, they have their numbers after the bell on Tuesday. Google, you want action through Friday for volatility, about a $13 move. For their earnings, about a $12 move. So about a 6% move priced in for Google earnings after the bell. AI, going to be in focus, of course. And then you have Amazon on Thursday, okay? And you got Amazon, down about 0.8%. Not that bad with the rest of the market. Now, it is interesting to see how the market digests the fact that some of their competitors are going to face an obstacle coming from China, right? And that was not a direct competition. Amazon had stated, right? Even when they were going to compete, they were going to do it under a completely separate label, not to confuse the two. Because, you want to save money. I mean, do we all know the meme stock, not the meme stocks, the memes in terms of you buy Temu, man, you get what you pay for usually, especially if you're direct drop shipping from China. But Amazon, they'll have their numbers after the bell on Thursday, and you're talking about a $15 move and $16 through Friday. So volatility in that equity for sure. You want to buy an at the money. We're trading at about 236, and at the money, put or call just for this week, you need about $8 a movement just to break even, but they got their numbers this week. So, Other companies with numbers this week, you jump over to Eli Lilly. They're out with their numbers on Thursday as well. This thing, man, look at the volatility here. From 827 to the 770s, back to 809. You check out the daily. Up to 972, but Eli Lilly, they'll be out with their numbers on Thursday. We got Bristol Myers Squibb on Thursday as well. Disney out with their numbers on Wednesday. So Disney, let's see what they have to talk about. As we trading right now, Disney down about 1% on the session right now for Disney shares. Other companies this week. You got PayPal numbers on Tuesday. You're trading down 1.9% right now. Pfizer down 1% right now. They're out with their numbers on Tuesday as well. Merck out with their numbers Tuesday. Merck actually trading flat right now. AMD off 2.3%. We jump to the chip stocks. Intel shares down by 3%. We check in on NVIDIA on the open. Whew. Down 4.9% to 114. Don't count those chickens before they hatch, folks. You're in it for the long term. That's great. But if you were counting cash you had in NVIDIA at 153 in a short-term basis, talk about, I mean, if you're in a margin position, think about what you could lose. And you better know you're playing with fire if you're in a margin position for something that goes from $10 to 150 over the period of just over 2 years. Not even, less than 2 years almost. Apple shares, quite a week last week, down about 2.5% right now. Microsoft, only down about 0.5%. Amazon, down 0.7%. We check in on Tesla shares. A lot of focus on Elon. Politics everywhere, man. Elon getting control of all the federal databases. Whew. I think that one should get a little attention, no matter where you fall on. Okay, but from a pure financial standpoint, it is interesting that Tesla, whether you believe in it or not, okay, they're going to face some heat potentially. You see it in Canada, okay? And they got problems already. And Elon's talking about next year is going to be epic. We've talked about it before. Anytime Elon says next year is going to be epic and it's barely February, be careful, folks. Okay, he's given himself a long runway not to be held accountable for those types of run-ups. And you just see the volatility that you're prone to over that time. You know, Tesla at 200 to 250, a lot more reasonable at 386 when you get the numbers they have. When you're talking about years coming down the line. Don't get me wrong. They're going to get every break they can in terms of the regulations, but it's going to be a tough one, man. Let's check in on the car companies. Ford, down 3.3% right now. GM, down about 5%. You catch a lift on the open. Check out some of the banks right now. JP Morgan, there's a little bit of flight to safety on the open. Down only 1%. We were all the way down to 260 or 264 right now. Bank of America, down 2.2%. Wells Fargo, down about 2% as well. All right. Yeah, we could talk a little Wells Fargo. Wells Fargo, they've been doing really well, man. Check out this chart, right? Look at that chart. $38 to $77. We put it even longer term beyond that. And you're talking about a run-up during COVID down to $20. Well above the highs you had in 2022. And yeah, what they're talking about is life after restrictions, right? 7 years into a Fed asset cap that blocked the bank from growing for 7 years. But yeah, the stock has climbed recently as the firm awaits feedback on the fixes. You know, be careful as there's a lot of optimism coming around the line as they're coming out of this. But that's the chart I wanted to get to. And look at how the assets. Now, Citi, they get their own problems, okay? But look at JP Morgan, $4 trillion in assets. Folks, look at it. Back in 2017, okay, I'm not going back ages ago. JP Morgan was at $2.5 trillion. And Wells Fargo was at $2 trillion. They were 25% ahead of the company. They're not 100% ahead of the company. Now, they've grown dramatically, but even if you look at Bank of America, they're at 3.3. Wells Fargo's at 2. Yeah. But they're up a lot, so be careful of the optimism because it's priced in. And that's the headline of the morning, man. Dollar jumps as stock futures decline. We're going to see how it plays out, but the dollar, one of the biggest moves going on right now. We check back in. 109.25. Just sitting where we're chopping around right now. We check back on yields. The 10-year, right about 4.5. The VIX hit 20 this morning. We back off a bit, 1892. NASDAQ 100, we catch a little bit of a lift on the open. All right, as our man Basil Chapman would say, the day is young, man. You jump over to crude. There you go. How about that crude market? $73 back. Stay tuned, folks. Coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer, the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. S&P is off by about 85. NASDAQ 100 off by 321. And yeah, we get a little bit of a lift on the open. You know, I was obviously thinking about it this weekend. I was refreshing my computer on Saturday even, digesting it, looking for the action for the open on Sunday night, of course. But this is going to take some time to adjust to the policies that are in place, okay? Because this is a daily moving story on a daily basis. Negotiations taking place. The tariff's not even actually in place yet, going in place at midnight tonight. Is there time? Do we get an 11th hour reprieve from the one and only savior, Donald J. Trump? I mean, these are the things that imagine that comes out, right? Imagine you set him up, knock him down, right? 25% tariff, and I'm not saying it's going to happen, okay? But there is the possibility of that, which is why the markets aren't going to go down 5 or 10% today. If these tariffs were going to stay in place, period, end of story, no negotiation, we're changing the way we do business, there would be a greater reaction. We're not quite sure, okay? We have a greater indication, but this is going to take time. There's going to be volatility in these markets. We're going to see volatility in both directions as the stories come out in both directions, as we've seen take place already with the new administration. So that's my take on how it's going to play out. You're going to get two-way volatility, but for right now, we're seeing lower lows and lower highs, and you're seeing it with volume, okay? Jump over to the NASDAQ 100. Every sell-off at the low says volume. You go take a look at, if you have my dad's book, Time in the Trade, you take a look at the chapter on quality volume, folks. This is what it looks like. Every time you're dipping down, you're doing it on volume. Okay, the spike's the largest one there. But every time you're at these lows, take these 3 days when you began on December 18th, right? NASDAQ 100, the 3 largest days in a long time. When do we start doing it again? On the lows of January 2nd. When do you do it again? On the lows of January 13th. January 27th speaks for itself. Okay, that was DeepSeek. That was the whole market there. And then where do we go to today? Now, we got a green bar right now because we're above the open, but you have a gap here. We'll see with the volume. But we got some volume. Same exact thing on the S&Ps, okay? S&Ps, they line up the same exact way. Quality volume to the downside. So from a risk-reward perspective, we're basically at all-time highs, okay? There's your 3-year weekly. If you're worried about this rip lower, we're only off by 1.5% today, and we're basically just consolidating at 6,000. You made it up to 61.63, and we've backed off a bit to 59.80. NASDAQ 100, similar action, right? All we're doing is consolidating. NASDAQ 100, though, is back to where we were July of 2024. If I told you the NASDAQ 100 was flat over 7 months, that'd be a hard one to digest. You get the Russell off by 2.5%. All right, we jump to what else we got going on. So Palantir, they're after the bell tonight, out with their earnings, and yeah, as Bloomberg puts it, soaring valuation, new record after the early slump, 400% in the past year, okay? Analysts are looking for potentially a pullback, okay? But you're talking about a 13% move, volatility, as we already went over, but in terms of what they're looking for, okay, they expect them to report earnings per share of 3 cents. That's crazy, right? Nonetheless, it's all about growth. A decline from the year before. $776 million in revenue, though, up almost 30% is what they're looking for. So keep your eye on earnings. Keep your eye on that number on revenue. But pretty remarkable that you're making basically nothing, and the stock is through the roof. A decline from the year earlier on earnings. Yeah, and, you know, Elon, you don't become the richest man in the world, man, without controlling a narrative in some aspects, okay? Because it is remarkable what Tesla is doing when the stories are just everywhere. Sales plunged 63% in the EU's second biggest market. They're talking about France. They only sold 1,000 cars in France in the whole month. The whole company only sold 1,141 cars in the entire month in France. It's $1 trillion company, folks. Look at those numbers. Lower lows, lower highs. If you kick out December at 5.7, that is quite a drop. So they got some issues. And yeah, he's going to make Europe great again. And he may. But if you're a Tesla shareholder, okay, it's you know, a lot of people don't want to get into politics because they don't want to deal with what comes with it. And Elon said he doesn't care about that, right or wrong. Okay, you can respect that. But as a Tesla shareholder, again, you know, that's those are two entirely different issues, and they are merging, and that's what happens. You know, conservatives say stay out of politics when Disney gets in, and sometimes you can see why when their stock price takes a hit, right? The same thing could apply to Tesla, is as I say it, okay? And we'll leave it at that. And yeah, how about this one? Even as a person that's not a huge basketball fan, love the Celtics, okay, of course. But from a person that understands risk reward, I'm sure we've all heard about the Luka Doncic trade. I mean, this guy isn't even 25, and they just traded him to the Lakers for a 31-year-old and 1 first-round pick in 2029. It's always amazing, folks. Now, he had to convince the owner. They did it. They don't think Luka plays defense, and they think he doesn't take it the whole game serious enough right now. But from a risk-reward perspective, right, here's where this story hits me is. Stories are that they went out to get the Milwaukee Bucks player. I can't pronounce his name, and I'll remember it. And they couldn't get him. Let's see. Giannis. That's what I couldn't. I can't pronounce his last name, but Giannis. They wanted Giannis, okay? They couldn't get him. Buck said no. You know Giannis loves that story, right? Maybe he doesn't. Maybe he wanted to go to the Lakers. Nonetheless, the team, the city, they love him. They weren't going to trade him. Not the case with Dallas, okay? If Dallas doesn't win a championship next year, they're done. They went to the NBA Finals, but that really doesn't matter, okay? Because the past is behind you. But here's the kicker. They go to the Bucks for Giannis. They say no. They go to the Lakers for Anthony Davis, and they make that deal. They didn't explore any other option. And if you're going to shop a player like Luka from somebody that understands risk, you know, unless you're dead set and you're so certain, but being so certain in yourself to not even give anybody else the offer, that's like selling your home, okay, and taking an offer for a trade for another property, which is what they're basically doing, and not even putting it to market to see what somebody might bid for it. And meanwhile, you have a property like Luka. That's what I can't understand sometimes from a risk reward, why you don't put it out to the rest of the field. The only reason you do it is you know what you need. He needed those players. Tough to imagine when you can get so many draft picks these days for a player like that. Nonetheless, we talk a little basketball. We go back to the markets. just chopping, right? We got a flat market right now from where we opened. NASDAQ 100, you're down by 1.75%. S&P's off 1.6. The Dow off by 1.3. And yeah, we do have some equities. Look at that run in Amazon. Like I said, don't doubt it, okay? That's a good thing that those Chinese cheap companies are going to have to pay imports for Amazon in particular. Temu, what are they doing? We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And yeah, markets trading off yet again. Do not get complacent today, folks. As we pick up the action, let's go back to a 5-minute chart. We zoom in on the open. The S&Ps, you trade from 59.62. We trade up almost 30 points, and boom, just like that, we're down, right testing the lows. We were here at 8 a.m. You were here at right at 9:30, coming into the, right at 9:30, coming into the opening bell. NASDAQ 100 back down to down 400 points, just like that. 100 points up, 100 points down. We're at 21,195. NVIDIA at 113 right now. Amazon shares down only 0.6% right now. We check back to some of the car companies. GM down almost 6%. Ford down about 4% right now. We jump to the cars. So car prices. Manufacturers exported about 2.77 million vehicles to the U.S. last year. GM is the biggest one out there at 889,000 in terms of exports for 2024. Nissan, VW, Stellantis, Ford at 386, Kia 270, Toyota at 245, Mazda, Honda, BMW, and Mercedes. You see how BMW and Mercedes not impacted. BMW building a plant in Mexico, I think ready, scheduled 2027, 2028, and 29, years into the future to come online. They're not pausing just yet, okay, because there's probably going to be some changes as negotiations persist. But yeah, they're talking about $3,000. At the consumer end of the supply chain, the average price of a new car may climb by about $3,000 is the number there. So yeah, and that is what they talk about. BMW there. Yeah, BMW's plan to invest 800 million euros in a new battery facility near Mexico, their Mexico factory. Nonetheless, things march on, right? All right, folks, S&P's off by 97. We check back in on how about that gold contract? All-time highs, 28.71. Gold in a rush to safety. The market, gold, even with the dollar pushing 110. Gold at 28.70. Folks, thanks for kicking off your trading day, your week right here at TFNN with me. Stay tuned for Basil coming up next. I'll see you tomorrow, folks. Have a great one.